The credit score is a comprehensive index that evaluates various business and industry factors. Understanding these metrics and their implications is crucial for freight brokers aiming to improve their creditworthiness. In this video, we'll explore some essential strategies for freight brokers to boost their credit score. Let's first talk about years in business. One of the primary factors influencing a freight broker's credit score is the number of years they've been in business. Generally, businesses that have been operational for less than 2 years are considered higher risk. This higher risk is attributed to the industry's trend where most business failures occur within the initial 2 to 4 years. As a business continues to operate beyond this critical period, the credit score is adjusted upwards every 6 months, reflecting increased stability and reduced risk. Now, why does this matter? For new freight brokers, this metric highlights the importance of survival and stability in the early years. By successfully navigating the initial years and demonstrating consistent performance, brokers can significantly improve their credit scores. This, in turn, makes them more attractive to potential partners who seek stability and reliability in their business relationships. Now let's take a look at carrier-supplier longevity. Another critical factor is the longevity of relationships with carriers and suppliers. A freight broker may have been in business for several years, but if their credit report shows references from partners with relationships shorter than 1 year, it raises concerns. This scenario suggests instability or dissatisfaction among previous partners, which can negatively impact the broker's credit score. Now, why does this matter? Maintaining long-term relationships with carriers and suppliers is a testament to a broker's reliability and trustworthiness. It demonstrates that the broker can sustain mutually beneficial partnerships, a key to consideration for shippers and carriers looking for dependable collaborators. By focusing on building and nurturing long-term relationships, freight brokers can enhance their credit scores and overall reputation in the industry. Next, let's look at volume of business with carriers and suppliers. The amount of business conducted with carriers and suppliers also plays a significant role in determining a credit score. Brokers who handle substantial volumes of transactions demonstrate greater financial strength and operational capability. For instance, a company averaging $45,000 per month with their references will score higher than one averaging only $1,500 per month. Now, why does this matter? Higher transaction volumes indicate robust business operations and financial health, making the broker a more attractive partner. Shippers and carriers are more likely to engage with brokers who can handle large volumes of business efficiently. Therefore, freight brokers should aim to scale their operations and increase transaction volumes to positively impact their credit scores. Let's take a look at payment trends. Payment trends are a crucial aspect of credit score calculations. Most payment terms in the industry are set at 30 days. Companies that adhere to these terms or pay early are rewarded with better credit. Conversely, late payments, especially those exceeding 45 or 60 days, incur penalties and negatively affect the score. The agreed-upon terms also matter. For instance, paying late on a 15-day term incurs penalties, while paying within a 60-day term maximizes score benefits. Now, this matters because timely payments are a clear indicator of financial responsibility and reliability. Shippers and carriers prefer partners who honor payment terms, as it ensures smooth financial operations and reduces the risk of payment disputes. Freight brokers must prioritize on-time payments to maintain and improve their credit scores, thereby enhancing their attractiveness to potential partners. Next up, collection activity. Collection activity reported directly to TransCredit or through organizations such as the International Association of Commercial Collections significantly impacts a credit score. While some reported debts arise from claims or disputes, most reflect a company's inability or unwillingness to pay bills. Such activities are viewed negatively and will impact a broker's credit score. This matters because a clean collection record is essential for maintaining a high credit score. Shippers and carriers view collection activities as red flags, indicating potential financial instability or poor management practices. Freight brokers should strive to resolve disputes amicably and avoid collections to preserve their credit scores and reputation. Understanding the key metrics influencing credit scores is only the first step. Freight brokers must actively manage these factors to improve their creditworthiness. Here are some practical steps to consider. Ensure longevity and stability. Focus on surviving and thriving beyond the initial critical years. Establish solid business practices and maintain consistent performance to gradually improve credit scores. Next, build long-term relationships. Foster and maintain long-term relationships with carriers and suppliers. Demonstrating stability in partnerships can significantly enhance credit scores. Next, scale operations. Increase the volume of transactions to showcase financial strength. Higher transaction volumes positively impact credit scores and attract more business opportunities. And timely payments. Adhere to payment terms and prioritize timely payments. Establishing a track record of on-time payments is crucial for maintaining a high credit score. And avoid collection activities. Resolve disputes promptly and amicably to avoid collection activities. A clean record in this area is essential for preserving creditworthiness. The broader implications for freight brokers. Credit scores are not just numerical representations. They carry broader implications for a freight broker's business prospects. A high credit score opens doors to better business opportunities, including attracting more shippers and carriers. High credit scores enhance a broker's reputation, making them more appealing to shippers and carriers seeking reliable partners. Negotiating better terms. Brokers with strong credit scores can negotiate more favorable terms with partners, leading to improved profitability and operational efficiency. Accessing financing. A good credit score is crucial for securing financing options to grow and expand operations. Lenders are more likely to provide favorable terms to brokers with strong credit profiles. Building trust and credibility. A high credit score builds trust and credibility in the industry. Partners are more likely to engage in long-term relationships with brokers who demonstrate financial responsibility and stability. For freight brokers, understanding and managing the factors that influence credit scores is paramount. By focusing on longevity, building strong relationships, scaling operations, ensuring timely payments, and avoiding collection activities, brokers can significantly improve their credit scores. A high credit score not only enhances a broker's attractiveness to shippers and carriers, but also opens up opportunities for better business terms, financing options, and long-term success in the competitive transportation industry. TransCredit has been one of the primary credit agencies in the transportation industry for 40 years, focusing on freight broker credit reports. They offer programs that help new businesses build credit and allow tenured companies the opportunity to update, improve, and monitor their credit reports and scores. By partnering with TransCredit, freight brokers can leverage these resources to enhance their creditworthiness and drive business success. We appreciate you for watching and hope you continue to find valuable information that you can implement. For this information and more, visit our blog at www.transcredit.com. And don't forget to like, comment, and subscribe to our channel at TransCredit. See you on the next one.